All right, good morning, trade pros. Welcome to the morning market update for Wednesday, October 10th, 2018. This is George Papsov from Trade Pro Academy. Today is oil inventory day. So today is the one day of the week in which in 1 hour of the one day, you could make your whole weekly income. And I don't care what job you do, you could surpass it trading oil inventory and how much you make in just one day in 1 hour. It's a very opportunistic day and happens every week. So we'll talk about that. We're also going to talk about this Hurricane Michael, who's got a boring name but disastrous potential consequences. And we're also going to talk about how that's impacting oil and treasury yields, the 10-year yield at the moment. Vic, I saw that sandwich at the corner of mine. I'm getting hungry. It's Victoria's lunch. Do you guys want it? All right, we'll leave them alone. Today's morning market update. Let's take a quick little trip around the world. In Asia, Japan's pretty much flat. Hong Kong's flat. China's up 0.2. India's up 1.4%. Modest gains, but really we could just say the whole Asian session just consolidated, and that's okay. After having some upside momentum, then really sharp downside momentum, a consolidation is welcome to a lot of traders. Actually, not the traders, the investors. Buy and hold people love consolidations. It gives them a chance to rethink their strategy. Traders don't like consolidation. No trader likes consolidation. Just the thought of it makes me sick a little bit. But Europe at midday, London's flat. Paris is down 0.4%. Frankfurt's down 0.3%. You can see we started the Asian session flat to modestly bullish, and then we've erased all that momentum, and the European weakness kicked back in on the open of European markets. All right, in the United States, Dow's down 0.1%, S&P's down 0.1%, Nasdaq's down 0.1%. Watch Nasdaq and technology stocks are leading the way lower. And I think we got more downside today. I think we're going to break today's low and continue going down. Everything's just looking the same as before. And now today even worse from the standpoint of a 10-year yield, which we're going to talk about in a moment. All right, the 10-year yield is up 1 basis point to 3.22% and up since then. All right, so we're getting a drive higher in these bond rates. And a bond rate increase is a result of an interest rate increase or an expectation for an interest rate increase. Okay, so we're seeing yields push higher, and that's putting bearish or downside pressure on equities. We've talked about that a lot. This morning at 8:30 in the morning, we had a very important report. All right, super important report. It was the PPI. The Producer Price Index is an inflation type report. It usually doesn't really matter too much. We have the CPI, which is the more important indicator that comes out, just coming out this week, tomorrow. And the PPI is usually kind of glanced at but overlooked for the main part. Today it was super important because it has a major impact on yields, fixed income markets, and also on the expectation of what the Fed's going to do next. So it came out at 0.2% as expected. However, year over year came out at 2.6 below the expectation. So that's the weakest inflation we've seen since December of 2017. Pretty much the weakest inflation all year. Now you might think, look, weak inflation, this is where I'm going to kind of help you as a newer trader decipher this. Weak inflation, you would say, means that the stock market should go up, right? Which means prices haven't increased much. Businesses are able to pass on future price increases. They're doing well, and goods are cheaper for consumers. They have an increase in price, therefore consumers can buy more, blah, 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 blah. This is the Producer Price Index. All right, producers' prices have stayed in line with expectation. There's no higher input costs. That's great, right? That's wrong. The reason the market does not like this number at 8:30 that came out is it's actually hawkish. It means interest rates are expected to go up more. Why? They've been raising rates forever. All right, not forever, but for the last year and a half, they've been on a constant. I think that was the 7th interest rate hike last week, or 2 weeks ago now. I think it was the 7th consecutive rate hike. So here's the thing: 7 rate hikes. All right, what did Jerome Powell say in his press conference in Q&A? And you as traders should know this. You should be making these kind of observations. What did Jerome Powell say about inflation? He slipped in the Q&A, but he said it. He said the following. He said, as long as, he said, if we get further increases of inflation, all right, that's going to cause us to act quicker, right? Now, this is a sign of inflation not increasing. So why would it be hawkish for the Fed? Watch this. Because the Federal Reserve gave us a surprise hawkish announcement, Jerome Powell being so inclined to raise rates was a bit of a surprise to the market. That's why we've sold off since. All right. And now inflation's not going up. It gives him the platform to continue his agenda. All right, it gives him the opportunity to continue doing what he's doing. And it's a hawkish read in between the lines. Nobody will tell you this, but it is. This is a professional opinion. All right. So this is not good for Fed. Bond yields went up as a result, and stock markets are down. And I can expect to see more of that today. Sell rallies. Yesterday in the morning, what we told you was to buy the dip early on. We felt like it was oversold. Buy the dip, ride it higher in the afternoon, start selling rallies. If you just follow that simple free advice on YouTube, you had one hell of a day, and I hope you did. Today, I'm not going to tell you what to do. Today, it's up to you. All right. 10 a.m., we have wholesale trade. 11:30, we got the result of a $36 billion 3-year note auction. That's huge for fixed income markets. So again, watch a 10-year yield. 12:15, Fed's Evans is speaking. 1 p.m., result of a $23 billion 10-year note auction. So that's going to be very important as well for equities. Fixed income auctions are now top of mind for every trader. Nobody usually pays attention for them other than fixed income traders. Now everybody looks at them because they're indicative of how the auction went, how it was received, what was the bid to cover ratios, that sort of stuff that's very important in the market. So you got to follow this, and especially today. If you're going to trade for the day, 11:30 and 1 p.m., huge times for you to stay on track with. All right, more debt sales, which we just talked about, is putting pressure on treasury yields. Here's an opinion of one institutional trader. We are at some sort of critical moment, a crossroads of types for bond and equity markets. So that kind of gives you the sentiment from an institutional perspective. They're at a point here where an institutional money manager is going to have to decide, if we get higher yields, I've got to start getting rid of my long positions and hedging the downside. How do you get rid of a long position? You sell your position. That's easy. How do you protect the downside? You short, all right, in order to offset losses on your portfolio by the money made on the short side of your trade. So let me see. You're selling longs and you're shorting to hedge. That's two sells. And that tells you where the market's going. All right. Let's move on to the last topic of the day. This Hurricane Michael is expected to hit landfall later today as a Category 4 hurricane. It started as a tropical storm, went to Category 3 last night, or yesterday. It was upgraded to Category 4. It's expected to strengthen even further. I mean, the most it could strengthen is Category 5. And then it's kind of like the mother of all hurricanes. It's making landfall in the Florida Panhandle and the Big Bend, around noon today. So we have a couple hours. These are potentially the strongest land winds ever recorded if it continues this way. 150 miles plus winds. Like, do the conversion. 150 miles, like 250 kilometers. Nuts. Ludicrous. Victoria just wants to eat a sandwich. Like, leave me alone, man. So that's a really strong hurricane type winds. And get this, 12 feet storm surge of water coming in from this hurricane, which is directly in the path. That's two of me, and I'm a tall guy. So what I got to tell you guys is, if you're out in that area that's going to be affected, Destin, Tallahassee, Tampa, Savannah, Charleston, Columbia, Wilmington, please just get out of the way of this thing. You could replace your home, you could replace your cars, you could replace any single materialistic good. Just please be safe, you and your family. That's all that I ask, because we can't replace you, and we like you and we appreciate you, and we want you to keep coming out these updates, and we could trade together. All right. So take the warning seriously, and I wish you guys the best as the storm moves through. I hope for the best outcome. Fingers crossed. You guys are my mind and spirit. I'll send you some positive vibes through meditation. All right. Here's the interesting part about this Hurricane Michael. Oil producers, this is where oil's bullish overnight. Yesterday we talked about it. It's not going to really affect the refining because it's more in Texas, more west. But here's what's happened. All right. Oil producers, Anadarko, BHP Billiton, BP, Chevron have evacuated many of their personnel. Even though they're so far away, they're probably not going to be touched at all. Not even a drop of rain is going to fall on their workplaces, refineries, etc. They're evacuating for safety precaution, with nearly 40% of daily crude oil production shut in the Gulf at the moment. All right, so it in fact has affected supply. Less supply temporarily, higher oil price. So this elevated oil price is temporary. As the hurricane moves through over the next couple of days, they'll come back in and reopen, and re-put supply into the pipeline. All right, so that's what you need to know. That's why oil has been up. So as this Hurricane Michael intensifies, they could potentially shut in more personnel or shut out more personnel so that they don't come to work and protect their equipment. Equipment's running, it can get damaged. And at the end of the day, that's how it's affecting oil. Oil's higher. Today's oil inventory day. All right, it's hurricane day. It's going to be one heck of a day in the oil market. Brace yourselves. It's going to be volatile. If you like volatility, you're in the right place. I love volatility. I wish I had a volatility alarm clock where I only woke up for volatility. All right, so on watch are insurers, because obviously insurance companies are going to have to pay for some of this damage. Power providers, hospitals, livestock, and crop producers, just to name a few. Generator manufacturers, building stocks. There's a lot here that could come into play. So to end the broadcast today, 10-year treasury yields continuing higher. Watch for some of these auctions early this afternoon and late morning. Pay attention to what's going on here in the hurricane updates. And most importantly, manage your risk and trade like a TRADEPRO. Today we'll be trading crude oil together at 10:30. It's a report that has the ability to make you a lot of opportunity in a very quick time. All right. If I could trade only 1 hour of every single week, it would be today on a Wednesday at 10:30. That would be enough. All right. If I was limited to only 1 hour, so that's that important. And the good thing is we trade it together. When you have volatility and you're inexperienced as a trader, volatility equals potential damage. When you have volatility and you know what you're doing in a group of the right like-minded traders, that becomes an opportunity. All right. And we go through, we provide trade ideas, levels, and we're pretty active with it. So come out and try it out. If you're on YouTube and you've been thinking about it, today's the day. Sign up. You still have a chance to get in before the oil inventory report. 10:15, I'll have Donna add anyone up to 10:15, and then 10:30 is all inventory. So you have some time. I hope to see you there. All right, plus comes 14-day money back guarantee. There's literally no risk. See you guys in the trading room, which I got to turn around and open up right now. Have yourself a great day, YouTube. Thanks for tuning in. Manage your risk, trade like a TRADEPRO. Have a great day. And anyone in the path of Hurricane Michael, please be safe. We'll see you soon. Take care. Goodbye. All right, trade pros. Big day ahead of us in terms of volatility. Equities, oil, anything you trade today will likely have elevated volatility. There's going to be a volatility surge, which means there's a lot of opportunity. Let's set up some trades here for the S&P 500. There's a few key levels I'm waiting for that have very high probability trade opportunities, and I'm going to show them to you and the trade idea around them. And if you guys have any questions, go ahead and ask as I go along. And let's get started.